Hello value investors, thank you for joining me. Today I want to talk about ServiceNow and why I believe that ServiceNow is actually quite reasonably valued. So we're going to talk about its revenue growth rates, we're going to talk about billings, we're going to talk about the whole thing of Rule of 40 and how ServiceNow fits in there. Finally, we're going to bring this all together and talk about its valuation. So if you haven't done so already, don't forget to check out my marketplace. It's called Deep Value Returns. I'll tell you the stocks I own and why, with balanced argument for the stocks I own. You're welcome to do a totally free trial and to see if you find something that suits you. So, for context, with ServiceNow, it's a company that I've actually been quite bearish for a long time, and I'm happy to say that when the facts change, I'm happy to change my mind, and this is one of the things that I believe has allowed me to do reasonably well against the S&P, because I'm happy to change my mind, and here is another instance of me changing my mind. So the thing that I've come to terms with ServiceNow is that the company is just batting away so strongly. So including the guidance into Q4, you can see that ServiceNow is very consistently hitting that 30% year-over-year growth rate. So it comes down to 28% year-over-year for Q4. But if you think about the year that ServiceNow has had to navigate, it's just impressive. And when the previous CEO stepped down and the new CEO stepped in, McDermott, I just felt, okay, he came in and he was saying, oh, we're going to have this revenue growth rate and we're going to be batting and we're going to reach 10 billion in revenues. And I was just like, that's just company rhetoric. But now I see that this is very visible. Maybe by 2024, the company can reach that. So it's not just company rhetoric, they're doing really, really well. Another thing I wanted to talk about is that the billings for Q4 is coming in at approximately 25-26%. So billings is a strong forward indicator in the SaaS community, and they're doing really, really well. So it is not the case that Q3 and Q2 and Q3 had some pull forward, as we saw in other companies in this space where they had this pull forward, and that many companies went about their digital acceleration. It's not that. So the company is really just batting away, and many other companies we've seen that they had this pull forward and then the next quarter's guidance is really dipping down. That is not happening here. So this is very, very compelling. Another thing that I like here is that Rule of 40, where it's balancing revenues, growth rates with profitability. For the year, ServiceNow is hitting approximately 50%, so it crosses very nicely into that Rule of 40, so they're doing really well on that front. Now, here, let's talk about valuation, right? So ServiceNow, assuming there's a little bit of deceleration, and it comes out that ServiceNow's revenue growth rate for 2021 comes up at 25%, which is reasonable, I believe. So that puts the stock trading at 17 times forward multiple. Now, ServiceNow is consistently growing. ServiceNow has gross profit margins of approximately 86% for its subscription line. So I'm not talking about its professional services where it's just consulting to get people on board. Obviously that will be a lot lower, but just the revenue stream from the subscription model is at 86%, and it has been expanding for years. So I think that that's just terrific. I think that you have a very high quality business here. So I've just offered a few comparables. So Salesforce typically does trade for about 9 to 10 times forward sales, and it's doing that right now. So that is obviously cheaper, but that's the only real name that I can see in the SaaS space that is cheaper. So obviously, if you compare with something like Coupa and DocuSign, those companies are more expensively valued. There are arguably reasons for that, but they're not really, especially in the case of Coupa, it's not really growing that much faster than ServiceNow to substantiate paying a larger multiple. So we talked about ServiceNow's revenue growth rates, we talked about billings, we talked about Rule of 40, we talked about valuation and why that brings it all together, and that investors are not paying a very large multiple here. So as always, don't forget to check out our marketplace on Seeking Alpha. It's called Deep Value Returns. See you soon.